Hey, what's going on, guys? Welcome back to another video. We're going to cover crypto and what's going on in the space to help you guys get a feel of what's going on, what's happening right now in real time. And right now in real time, we have interest from institutional investors for Bitcoin and Ethereum at record level. Not only that, but institutional investors are getting more attention and more invested into decentralized finance. Bitcoin and Goliath Grayscale reveals $1.4 billion investment in crypto funds in 2020. Their numbers are on the up and up. We've been following Grayscale since the birth of this channel. I think actually one of my first videos was on Grayscale. So it's just been really interesting to see how much they're putting into crypto assets over the course of this time. We'll go over crypto prices and everything like that. We also are going to go over Binance destroying $16.5 billion worth of BNB, and we'll also go over a little bit of the Bitcoin price action, kind of what it means. This article isn't going to necessarily give us price targets or anything like that. It's not some hype, some Bitcoin's going to the moon type hype, but it will help you to better understand what exactly Bitcoin is doing right now. Why are we trading here, and kind of the environment that Bitcoin is in right now. Help you get a better feel. With that said, if you guys could like the video, that would be greatly appreciated. And we're going to start here today. We're going to start with the institutional interest from investors. So exchange LMAX digital records an increase in trading volume for Bitcoin and Ethereum of 106%. Now, LMAX Digital Exchange also has a record number of clients with over 200 institutions globally. So they're definitely a decent sized player here. This isn't really a small fish. This is a digital exchange that has quite a few institutions, and it's on a global scale. So LMAX states that the exchange has seen a 106% increase in the first half of 2020 for its trading volume with Bitcoin and Ethereum. For the past 2 years, the exchange has been offering institutions trade in the above-mentioned cryptocurrencies and in XRF, Bitcoin Cash, and Litecoin. Sorry guys, that's XRP. I don't know why I got cut off there. I was actually about to go to CoinGecko and look up what is XRF, but sorry. So that's XRP, Bitcoin Cash, and Litecoin. The LMAX group also reports a significant increase in the trading volume for the United States. Current trading volume registered an increase of 165%. In addition, the crypto exchange has a record number of new clients. According to the press release, LMAX Digital is working with more than 200 large institutions globally that trade with Bitcoin, Ether, and other cryptocurrencies it offers in the United States, Europe, and Asia. The CEO of LMAX, David Mercer, said the following. He says, "We have seen growth in new large institutional clients around the world trading on our execution venues and deepening of existing relationships. This is attributed to the quality of the liquidity and execution we offer across exchanges. In the 2 years since LMAX Digital launched, it has become the leading cryptocurrency exchange for institutional market participants and has secured its position as the primary price discovery venue." In the last 10 months, trading volume has increased tenfold to 75 billion. So again, guys, they're not exactly a small fish. This is some really big money. It's considerable money, and it's a good thing to keep our eye on because all this stuff is increasing. These numbers are going to be nothing soon when you combine all the institutions and all the institutional exchanges that really start getting on board. I think in the next couple of years, and even down the road, the many years to come after that, because obviously blockchain technology is not going away, and it's going to continue to expand, and it's obviously going to have a very prevalent role in the fourth industrial revolution, which is basically almost here now. I think we could say that if we haven't entered it yet, we are very close. If you guys haven't, I would do some research on the fourth industrial revolution. You can even pick up a book on it from Amazon, which is written by a guy, I forget his name, but I'm pretty sure he was from either the IMF or the WEF. Do some research on that because you're going to get a better understanding of blockchain and a better understanding of the people who are controlling the strings here and what exactly they want to bring about, so you can better prepare yourself. In the first quarter of this year, the crypto exchange experienced a 41% increase in in quarterly trading volume and reached 20 billion, despite the impact of the COVID-19 pandemic on the global economy. So despite the beer disease, they had a 41% increase. So that's pretty insane. I believe this is also from Mercer. It doesn't say, but I would assume it is. He says, we have been impressed by the resilience of cryptocurrencies, particularly Bitcoin, and note that they have been relatively stable compared to other assets which have enjoyed central bank intervention and still shown extreme levels of instability. So what does he mean by that? He means the Fed buying stocks, flooding money into the market, yet it's still not stable. He's saying cryptocurrencies are looking more stable than things that the Fed is inflating. That is a massive, massive statement to make. I know that's not what he said exactly, but the way I'm reading it, I'm trying to read between the lines. Now, if you're interpreting that differently, please by all means leave it in a comment down below. I'm just letting you guys know how I'm interpreting it, and of course I could be wrong. We see this as an encouraging sign that investors are starting to place more value in digital currencies and have continued to trade through spikes in volatility. Let me know what you guys think of that, guys. Pretty bullish news there. Institutions are getting in, money is getting in, price action is probably going to follow soon. We also have institutional investors are turning their attention to DeFi. We could go into this a bit, but it kind of touches on the same thing. Just they're also eyeing the DeFi markets. If you guys like daily cryptocurrency videos like the one you're watching right now, then make sure you subscribe to the channel. We do a video daily, or almost daily. Sometimes I skip, sometimes you just got to take a break, but almost daily, covering Bitcoin, altcoins, and everything going on in the crypto space to help keep you informed on what's going on right here and right now. If you guys could like the video for me, I do appreciate any support that you choose to give to the channel, so thank you for all the likes, all the comments. Your guys' support has honestly been amazing. Now let's get into Grayscale. The digital asset manager Grayscale says inflows to its Bitcoin and other crypto investment products reached 905 million in Q2 of 2020, bringing the total capital raised to 1.4 billion in the first half of the year. The firm says 84% of the investments are from institutional investors, which are primarily hedge funds. Now, of the returning institutional investors, 81% are invested into multiple products. So the question here really is multiple products, what is their product, right? What is their main product that they are selling, that Grayscale is selling, and what's the one, what are their other products? So like what I'm trying to figure out are these other products different cryptocurrencies? Are they doing bundles? What are these other products? If we could know that, it would give us some more insight into exactly where the money is going within that institution. So they say for the first time, inflows into Grayscale products over a 6-month period crossed the $1 billion threshold, demonstrating sustained demand for digital asset exposure despite a backdrop characterized by economic uncertainty. The firm says its Grayscale Bitcoin Trust continues to lead the pack in investment demands with inflows of 751 million in the last quarter, which marks Q2 of 2020 as the product's 4th successive record-breaking quarter. The company says that following the Bitcoin halving in May, inflows into the Grayscale Bitcoin Trust surpassed the number of newly mined Bitcoin over the same period. We've been saying this a lot, guys. The Bitcoin that's being put out by miners, Grayscale's buying more. Okay, so that's like simple supply and demand. If Grayscale is buying more Bitcoin per month than miners are putting onto the market, I mean, that basic supply and demand, right? Very, very basic. If that continues, I think it would be a sure bet that we could say, the price wise it'd be going higher because there's going to be less supply and the demand is going to increase because of not only retail but more institutional involvement. Simple supply and demand. The Grayscale Ethereum Trust recorded an inflow of 135 million in Q2, accounting for nearly 15% of total inflows. The Litecoin Trust also surpassed its investment records, and the Grayscale Bitcoin Cash Trust saw its largest inflow since Q2 of 2018. So as we can see, they have Ethereum Trust, Litecoin Trust, Bitcoin Cash Trust. So before I pose the question, what are their multiple products? I'm wondering if there are multiple products, their other products could be like, let's say the investors are primarily coming in under the Bitcoin Trust, and then their other products are the Litecoin Trust, the Bitcoin Cash Trust, and other coins. If anybody could clarify that for me, please let me know. I could probably do a quick Google search and maybe find out, but I'm in here in the middle of recording, so I'll probably just end up doing that after. Anyways, guys, Our prices for today, Bitcoin is at 9,100, Ethereum is at 234, XRP is at 19 cents, ADA is at 12 cents, Chainlink at 787, and Litecoin at 42, Tezos 293, Stellar dropped under 10 cents, and VeChain is at 1.8 cents. Your Fear and Greed Index for today is at 41, and if you guys don't know, now you do, Binance destroyed $60.5 million worth of BNB in their biggest burn to date. And it basically just goes over here that the Binance coin, I guess, is meant to be burned. Because when I first looked into this, I was like, well, why would they burn coins? But I guess their strategy for increasing the price is to burn tokens. So I guess the reason why people would be buying Binance coin is because it's a currency for the Binance exchange, and also for the added possible price increase because of burning of the tokens, basically reducing the supply. I honestly didn't know this about BNB. I also don't own BNB. But I think a coin, and this isn't to bash on it, I haven't done much research, but I don't know if I really understand burning tokens, because wouldn't you start to burn, at what point have you burned too much? And are you supposed to just always burn? I don't know. Can they also make more of these tokens so they're constantly burning and creating more? I'm not sure. I honestly, again, I haven't done my research on BNB. But if any of you guys have, maybe you guys own BNB, let me know in the comments, like, what is the reasoning behind this? And if any of you guys are wondering, check the comments. Hopefully somebody down there who is educated on this could let us know. But yeah, so they burned off their largest burn to date. And the interesting thing, guys, is the price did not increase. So in this article somewhere it says that here it is. The burn didn't boost the price of BNB. As it stands, the token's value is down 1.5% in the past 24 hours. So that also poses the question is that if this is to raise the price, one, is it ethical? That's my first thing. Is this ethical, or is this just, a giant, kind of make money thing because we're burning tokens? And, is the strategy even working because the price didn't even increase on the biggest burn to date? Again, I'm not trying to hate on BNB. I'm just posing a couple questions because I'm genuinely confused about this. Anyways, last thing we'll get into, the indicator signals Bitcoin's boring price action will come to a violent end. So Bitcoin has been finding an unusual amount of stability around 9,100. The crypto has been trading around this level throughout the past several days and weeks, struggling to gain any decisive momentum. The cryptocurrency's consolidation phase has been narrowing throughout the past few months, as it was previously trading between 9,000 and 10,000. The crypto will likely put a violent end to this trend in the near term, and Bitcoin's true range percentage hits the lowest level seen in its entire history. Buyers and sellers have both attempted to invalidate the tight trading range that has been formed between 9,000 and 9,300, but each movement above or below these boundaries has been fleeting. This has resulted in the benchmark cryptocurrency seeing one of its tightest true ranges in history. Mohit Sarau, a founding partner at Bitazoo Capital, he says, this month is turning out to be one of the lowest true ranges in BTC's entire decade-long price history. So what he basically means is that right here where we are on this chart, we have more price action in this range here than we have in any other point of Bitcoin's history. So you could say, okay, right here was a range, and right here was a range, but this has so far been the absolute longest range in Bitcoin's entire history. So the sideways trading may be akin to a spring coiling up. The longer it coils, the bigger the subsequent move will be, which I have also heard a lot from a lot of analysts. They say that the longer price is suppressed, the bigger the move afterward. So historical lack of volatility continues. We don't get this tight without a big move as a result. Enjoy the inevitable ride, he said, while pointing to the chart seen below. And that is from another analyst. So there is a strong likelihood that Bitcoin's reaction to its macro trading ranges boundaries at 9,000 and 10,000 will ultimately be what provides traders and investors with guidance into which direction it will trend next. So that's basically it, guys. I see the thing here that everybody's really wondering is, just where are we going? Are we going to break the trend up and start our bull run, or are we going to break the trend down and start a new round of accumulation before that, possible inevitable bull run? That's the thing that I think most people are trying to figure out. Now, I know a lot of people are angered. They just want to know, well, we want to know what the price is. Where's the price going to be at what time? And you know, I said this on a previous video where I was like, we need to get confirmation from Bitcoin of what's going to happen. Are we going to break this trend up or break it down? And people didn't really understand that. I got one hate comment, and I think it's just because of a lack of understanding of trends. When Bitcoin's in a trend, you want to follow that trend. You don't want to go against it. And right now, in this just particular point of Bitcoin that we are in, we are kind of at the middle point of this trend, and we need to figure out whether we're going up or whether we are going down. We need that confirmation because nobody really knows right now. So Bitcoin needs to tell us, and then we need to trade accordingly as to what this new Bitcoin trend is going to be. So are we going to continue down on this current bear market, bear trend, or are we going to start a new trend? That is the confirmation we need. So guys, if you enjoyed the video and you made it this far, make sure you subscribe and turn on the notifications so you're upload every single day when we put out our video. And if you guys could like the video once again for me, that would be greatly appreciated. Let me know your comments, opinions, questions, ideas, anything down in the comments below, and I will see you all on the next video. Oh, also, before we jump off here, if you guys want to join the Discord, link is in the description for any of you that want to join. With all that said, hope you guys are having a great day, and I'll see you all on the next one.